Folks, it's Matt Hayson here looking at everything impacting Sydney's property market this week. And let me tell you, it is a big one. Inflation, the RBA's confusion. Well, writing in the AFR this week, Christopher Joye was scathing, and it centres on the Reserve Bank's messaging. In Melbourne, Governor Michelle Bullock had said that the economy is in a reasonably balanced position and that patience is required. Yet only days later, speaking at the AFR Business Summit, the tone had shifted. Suddenly, every meeting is live, and the RBA has signalled it may not wait for the next quarterly inflation print before acting. Now, that's quite a pivot inside the same week, and Joye says that calm narrative is dead wrong. He argues Australia faces a productivity and inflation problem driven by heavy government spending and years of excessively easy monetary policy. And the markets seem to agree with Joye. Betting markets are now pricing in a 33% chance of a rate rise when the RBA does meet on March 17. So the message is pretty clear. The writing is on the wall, folks. Rates are going higher. It's just a matter of when. Now, February, Sydney values, PropTrack versus Cotality. Two of the most referenced property data companies in Australia have delivered very different readings for Sydney in February. PropTrack, well, they say Sydney values rose by 0.5% for the month, pushing annual growth to 6.1%. But over at Cotality, which many consider to have a slightly more granular model, tells a very different story. Their data shows Sydney prices were very much flat in February and actually a down 0.1% over the past 3 months. Now that's quite a gap. And when you speak with agents on the coalface, the conditions that we are seeing tend to line up more closely with the Cotality view, which brings us to the real test on any property market, and that is Sydney auctions, the market's reality check. Well, last week across Sydney, there were 1,587 scheduled auctions. Only 20% of those sold under the hammer. Another 25% sold prior, which means more than half did not sell at all. Now, what we're seeing on the ground reflects that. Buyer depth is absolutely being tested. Sellers, well, they're increasingly open to doing deals mid-campaign. And for buyers, they're still active, but they certainly have choice. Now, in short, when we start to see a clearance rate drifting into that mid-40% bracket, it says to us that the balance of power is starting to shift. There's probably some downward pressure on property prices, and sellers need to be ultra realistic because right now, that market could be tilting in favour of buyers. And then finally this week, Sydney gets a brand new suburb for the first time in 100 years. Yes, a genuinely big structural story for Sydney. For the first time in more than a century, Sydney is about to get a brand new inner city suburb as the Minns government has confirmed plans to transform the Glebe Island Industrial Precinct into a new harbourfront community called the Bays West. Now, the project will deliver more than 8,500 new homes, public waterfront access, and a precinct built around the future Bays Metro Station. The iconic and very much ugly silos that have stood there since the 1970s will be demolished as port operations exit by 2030. It's a huge transformation. A site stretching from Roselle Bay to White Bay, just 2 kilometres from the CBD, is being reshaped into an entirely new inner city neighbourhood. Now, the first homes are expected to land by 2032, and given the scale of Sydney's housing shortage, projects like this will certainly play a major role in shaping the city's future. So, what are the takeaways this week? Well, the economic signals remain mixed. The property data is conflicted as always, and auction results are showing a market that's certainly being tested. Now, for sellers, pricing discipline does really matter, and for buyers, you have choice, but don't sit idle because deals are happening. Now, there is unbelievable real estate open this weekend. Thanks for tuning in, and I look forward to catching you all next week.